What's going on, everybody? It's Jeff here. Welcome back to the channel. Market continues to make all-time highs. SPY hitting another record yesterday. Love it when a good earnings season comes around. You have some of the tech sector really boosting the market, as well as some other of the large cap companies still feeling the full effects of the supply chain shortage, as well as the labor shortage. I've had some people reach out to me saying, Jeff, when are we going back to our long positions? I want to give you an update on that as we are deep into the second year of the bull run, and the S&P has not hit that correction territory of 10% down from all-time highs, which is a rarity. The next thing I want to talk about is AMC. We are sitting at that $35 level. Last time we got a good bounce off of that level. We're going to see if that support holds again, but I want to talk a little bit about the share flow as well as the option chain as it has changed a little bit and just give you an update on that. So let's get right into it. First off, right here, you can see the NASDAQ jumps as tech stocks gain after earnings. Both Google and Microsoft posted stronger than expected earnings. Robinhood stock had a little bit of a hit today. I want to cover this article. Robinhood stock is tumbling because meme stocks and Dogecoin are fading, when in actuality, I believe it's because the users are leaving their platform due to their sketchy and shady activities. I know a lot of you have switched away from Robinhood because it's about time you use an actual brokerage. So kudos to you. And Robinhood, I tweeted earlier today, if I could short this stock on TD Ameritrade, I totally would have. Let's talk a little bit about the S&P, the SPY right here. You can see yesterday hitting all-time highs. We're going to get a little bit of toppiness happening right here, which is very normal. As you can see, this downward trend line, as soon as we got the green light, the interest rates are not going to get risen as of yet. The debt ceiling got raised. Everything was good to go on the 14th of October. The market continued to gap up and make all-time highs. We did have a little bit of divergence here. One thing I want to talk about is the QQQ as well, continuing to make all-time highs. And this is heavily weighed by the tech sector. I will talk about Facebook because it is setting up for a potential for a good dollar cost averaging swing position, which is basically building a starter position. If you're looking to get 100 shares, you might want to start by buying 30 or 40 right now and slowly add if the price does decrease a little bit. I do see this being a little bit oversold right now. As an advertiser on Facebook, is what I've done for my business for years. I've been using Facebook for probably about 6 or 7 years advertising on it. Their restrictions have gotten tighter and tighter. And as an advertiser, it does get a little bit frustrating. And Facebook has seen advertisers leave its platform. Google and YouTube is a little bit more free-spirited. However, Facebook still holds the attention of millions, hundreds of millions of people. So I don't think it's going anywhere anytime soon. So keep that in mind. Next one I will talk about is Lockheed Martin, which is one that is suffering by supply chain issues, and one that I took an absolute bath on yesterday. I believe it would be insanely oversold after earnings, and this is also a good for any one of you who is a little bit inexperienced with this. I saw a base forming here of about $344. I added long at about 346. I added again to my position at 350, and unfortunately, I really thought this conference call, the CEO is going to come out and try to reinstore investor confidence as his stock had dropped over $40, $45 at this point, and it just didn't happen. So I had to cut my position, and I took a big bath on this one. But this is another company that is getting hit by the supply chain issues, and we'd like to see this slowly recover as some of these issues will resolve. Just remember, the supply chain issue with cars and new vehicles, it's going to take some time. But this is something that will easily get solved in, like I said, just a matter of time. Now let's talk about AMC. We're sitting just below that $35 right now. And I want to take a look here on the daily chart. As you can see, this red line that I have acting as support. Last time we got a bounce off that 35, went all the way up to the $45 level. I'm looking to see if we can get that bounce happening again. We have made a lower high, as you can see here, back in September, all the way to, this was October 19th. We are seeing a little bit of a lower high. However, we're still maintaining support very well going forward. Volume is getting a little bit lower. There was a little bit of speculation on some individuals, some I should say professional retail traders jumping away from the stock as the range isn't there. And that is one thing I want to talk about. As I mentioned earlier in this video, the share flow and the options flow has changed a little bit. Now, somebody like you who are watching this video and myself who has purchased AMC, I added to my position twice actually since all the way in early February. This is not a stock I day trade for the main reason of being behind everything that has happened with AMC. However, for professional traders that do this for a living, that care nothing about anything except for the charts and what the charts look like, AMC has been a day trader's paradise. And the reason being is because the pattern was very, very recognizable and it was very similar. It would either pop at the open and then slowly drop all day long, or drop at the open, as you can see right here, and then pop back up. And it would give very good range. And we've talked about this in my videos before. It would fluctuate between $2 and $2.50. And when you think about, because the price is at 35, let's say between 35 and $45, some of these guys can literally buy, maybe 3,000, 4,000, 5,000 shares on margin. And that's not even with a insanely large account, and make $10,000 a day in the matter of 20 minutes like clockwork. And that slowly began to change a little bit, just like everything inside the market. There are things that shift. We've talked about this recently, that we had a little bit of action on the SPACs because of the Trump SPAC, DWAC, and we had the Bill Gates back SPAC, GWH. We've seen some other SPACs get into the sentiment of trying to get a little bit of run happening from this. So it's natural for a shift to happen, and that's what I believe is slowly starting to happen. And you can see that with the volume changing, as well as just the way the flow happens. If you can watch the tape, all right, if you understand the times and sales, they call it the tape, and the way the orders flow in, you can see that it has changed a little bit. And when you look at some of the ranges here, and if I look as of yesterday, we have about $1.50, and this was on a good spike. If you go back even to the day further, this is probably a little bit over $1.50, about $1.80, $1.90, but it's slowly starting to shrink the gap a little bit from that $2.50, $3 range. And don't forget, back when we got to above $72 in June and July, we were seeing $8 or $10 ranges. So we were attracting a lot of volume coming into it. And the good thing about this, I know many of you have said, oh, it's the day traders that hurt this because they short the stocks. It's all it takes is that heavy volume and a very little bit of the wrong side to where eventually that's where the move happens. Okay, you might be able to play in this, but when there's a lot of volume, when a stock is very thick, that's always a good sign for the stock. So I hope to see that volume come back into here. And I also, like I said, I hope to see that $35 bounce. If you're looking to add to your position again, anytime between this $35 and $36 range has been completely comfortable. Looking at this strictly from a chart standpoint. The last thing I want to talk about when it comes to the chart of AMC is what I tell everybody when we talk about certain stocks in the day-to-day, as I'm actually watching one right here in my upper left-hand corner, that we've said is that it needs to completely break support for the play to be done. And we haven't done that yet. If this stock got back below the $20 range, and yeah, it would be at the point where it needs to really come down and kind of start back over. But the play is still there until it breaks support. The play still stands, and actually the stock is still in play. So if you're holding, be patient, continue to stack up, learn the market, take a little bit of money, play some other stocks. Maybe you can get some of those gains, transfer it back over to AMC. That's going to be it for this video. I will see you in the next one.